Shukran for everyone attending today. Shukran to Maulana Muhammad and Abdul Aziz. I think Maulana Muhammad and Abdul Aziz has said everything that I could possibly say, and even more. So we're basically a financial advisory. So everything that Abdul Aziz has contextualized and Maulana Muhammad has contextualized, we take all those, everything that you've heard today, and we actually put it together. So our role is to walk a journey with each and every individual to put financial planning in perspective. For us as to show the individual that you can actually create wealth and move away from looking for a loan or anything like that. We want to enable the community to make better financial decisions, basically. So we have 2 stores where we actually take individuals and we educate people on how to make those financial decisions. Whether you're an entrepreneur, an individual that just wants to know how to work with money. For us, the important thing is, if you can't work with 1,000 rand, you won't be able to work with 1,000,000 rand. So we take you through that journey step by step. So a lot of people think financial planning is about selling a policy to individuals. No, it's not. It's about actually educating people to make better financial decisions, to give you clarity on what products, what is out there, to educate you that you can actually enable yourself to make better financial decisions. Is there any question so far from?
Was that your talk? Okay.
Look, for me it's more about being engaging, because I can say all the things that you want to hear, but it's also important that you as the community ask those questions, which is relevant to you actually.
Okay. So the floor is open. If anything has been pricking your conscience, anything that I see there's some ladies at the back. I don't know how we're going to get that questions, but we're going to maybe try to. If you can write it down, then we can facilitate that. We must always think of that beforehand, not as an afterthought. But anyway, so the floor is open, inshallah. The floor is open. Okay.
My colleague Abdul Aziz has put me in spot to ask a question. I will. So maybe for the panel, to put Islamic investing and finance in context, to talk to us a little bit about what is happening more globally around Islamic investing and the revival of Islamic investing globally as well. Because it's clear in South Africa, the Islamic investing movement is catalytic, it's improving, there's lots of more information for people, but maybe a little more context of what's happening more globally and what are we seeing there as an inspiration for us as investors. I'll leave it at that.
Should I answer it?
Yes.
Yeah, so I think it's maybe just a bit of history. I think the first Islamic bank globally was started in the 1960s actually. So, you know, even though Sharia has been around for over 1400 years, and as long as Islam has been around, you know, the codification and the structuring of Sharia-compliant investments in banking only really started in the late 60s and really started to gain momentum in the sort of 1980s. And IOFI was started in the mid-80s, you know, in Bahrain. And if one looks at the industry today, you'd be surprised to know that it's not the Arabias or the GCC countries that are at the forefront. It's actually places like Malaysia, Asia, and in the Western areas, it's actually places like the UK and Canada. In particular, the UK is one of the fastest growing areas for Sharia-compliant investing in finance. For 2 reasons. Firstly, the regulatory environment, even though a lot of those, you know, institutions are operating in what we would call a Western sort of society, there's actually a lot more freedom from a financial point of view to have those products and services as well. And we've seen, I mean, ironically, the longest serving Sharia-compliant unit trust is based in the US. It's a Mana fund. And that fund has been going for a couple of decades already. Closer to home in South Africa, I mean, our industry, as I mentioned in my talk, started in the 1990s. Just prior to that, there was a Southern Pure Fund that started in 1992. So the industry in South Africa is about 30-odd years, 32 years old. But we also growing quite fast, especially on the what we call the retirement savings side. As more funds and as more sort of retirement funds start to give their members a member choice, we're seeing that the Sharia fund space within the overall industry is growing much faster. So to give you a context, I mean, South Africa, our GDP is maybe just about 1.2%. Within that, we don't have really a growing employment sector. And I just wanted to touch on what Roland has mentioned. Last year, this is a talk I gave at the high school earlier in the week. Last year, there was almost 1 million matriculants. Almost 1 million matriculants. These are people that drove matric, grade 12. I mean, if you think of how many people got into university last year, it was just over 100,000. If you look at all the universities and all of the technicons, it's over 100,000. How many people from those matriculants found a job? 14,000. So there's over 800,000 matriculants from last year that are not studying, that are not in a formal job. What are they doing? Every year, we've got another million coming. So what happens to them? I mean, our unemployment rate is sitting at 32%. So unfortunately, South Africa, and we can't depend on handouts, we can't depend on a SASSA grant, for example. We need to do something, and I actually have an idea, and I want to pitch it to Nasief and to Muhammad Carr around entrepreneurship and just formalizing Sharia-compliant entrepreneurship. If one looks at, and yeah, I have to just maybe unfairly talk about what's happening in other segments of our society, and Muhammad Carr mentioned Northcliffe. If one looks at some of those, communities, they've got a culture of looking after their own. So if they are matriculants, people, there's actually facilities for them to start jobs or to start their own sort of, business undertakings. And most of them, there's a non-permissible riba funding sort of component where they're giving, a loan and you pay back the loan, or what they call mezzanine finance. And Nasief are familiar with these concepts of mezzanine finance and hybrid loans. And I think we need to create a Sharia-compliant alternative. There are people with capital in our communities that can fund entrepreneurship. Because the biggest hurdle for many people to start a business is capital. If you want to start a hairdressing salon, if you want to start a laundry, you need some capital. And a matriculant, might have a matric certificate, but they don't have capital. So if we can facilitate sort of a business structure, I'm just thinking out loud here, a business structure, we actually, and Riza sitting here from Al Baraka Bank, we must have a chat, Riza. A structure where we've got, people that are, especially our, youngsters that matriculate, if they can pitch ideas and say, okay, we give you a 5,000 rand loan to start a business, fully halal, maybe we take an equity stake, it's a pure partnership or some sort of structure for our community where you're not forced to make a loan, you're not forced to beg on the streets and all of that as well. So I think that's quite important. And actually, to answer the question, I think that will accelerate Sharia-compliant investing and finance because you're building your own stock of capital, and ultimately those people will then employ more people, and that's the best way for us to actually grow wealth within our communities as well. Shukran.
I have a question. I have a question, but I'm not sure if it is directly related to Sharia-compliant finance. That's more with regards to clarity. If what I'm doing is permissible, and how do I do it in a permissible manner, or what are the options for me to be compliant in the court of Allah subhanahu wa ta'ala. So it has to do with shares. So shares has become more accessible to buy shares, even if it's a 200 rand or a 300 rand part of a company. I understand the clear face value items with regards to staying away from interest, staying away from things that has to do with gambling, staying away from alcohol things. So I need to know, what can I, as an individual, look at with regards to things that can guide me. So hypothetically, I had a 200 rand or 300 rand, and I bought a 200 rand, which gave me 1.2 shares of stock in, let's say, Mr. Price. How do I know if that is permissible? How do I know what to look for? And do I then, if it is not, do I then just get rid of it? And how do I get rid of it? Who do I give it to if I have to get rid of it?
Anyone? All three?
Normally when I receive questions like these, I receive like a written question and I give a written answer. And the first part of the written answer would be that may Allah SWT reward you for ensuring that your earnings align to Islamic law. In other words, it's permissible. And that's very important, so may Allah reward you for that. And we find that there's a definite link between our materiality and our spirituality. Allah addresses the messengers and He addresses us with the same: eat of goodness and do good deeds. So there's a connection between the two. Your question is a very loaded question. So you basically have shares, and Sidi Abdul Aziz basically explained what shares are. It's basically fractional ownership within a company. So at the first question you ask yourself is, this company, is it engaged in permissible activities? So there's basically two filters that you apply to any given company. The one is a qualitative filter. In other words, the core business function. So you gave Mr. Price as an example. So, sometimes, and that's where you require expertise. When you look at Mr. Price, you think Mr. Price home, but Mr. Price may be broader than just Mr. Price home. They may be offering a lot of other offerings as well. But let's say that whatever the core function of Mr. Price is all permissible activities. They sell homeware, for example, or they sell food, clothing, etc., etc. So the core business function would be permissible. So that's it passes the qualitative filter. But then the second filter that it needs to pass in order to be Sharia compliant would be a quantitative filter. So they basically put certain filters into place. So we already spoke about the environment that we subsist in, and it is an interest-based environment. So if you look at Mr. Price, for example, they're going to have a bank account. That bank account may, or in all probability, basically accrues interest. So the core functionality of the company is permissible, but they would have, let's call it, contingent impermissible earnings, like for example, interest accruing on the bank account. So the general filter there would be that the interest or impermissible earnings that the company has must be less than 5%, and like that there are other filters. So to answer your question in general, that in order for a company to be considered Sharia compliant, you need to apply filters. The filters are basically two. There's a quantitative filter and there's a qualitative filter. And that, to be very honest with you, that's why you have Sharia boards primarily, that would actually sit and they would interrogate the Sharia compliance of a given company and determine whether it's permissible for you to invest in or not. And there's also like standards that will actually guide you in that particular regard. So let's say you buying shares, you investing directly into shares and you buying, then if you have the expertise, then a good guideline would be there are OFI standards that you need to actually basically understand and apply in order to ensure that you're investing in a Sharia compliant company. Then you can also look, I don't know if this is the most advisable thing to do, but a lot of people do it. You can actually go online and you find that there's certain like Islamic finance gurus, like reputable, and they sometimes do the work for you. They look at a given company and they give you a detailed breakdown of the company, and they basically tell you that, look here, this company is Sharia compliant. So I think what the question also does is it gives you an idea in terms of what Sharia advisors do. This is primarily what, in an asset management space, they do three things. Number one is they create an index of companies that are Sharia compliant to invest in. But that company, it may start off as Sharia compliant, but then we move into the second sort of category, and that is to maintain those companies within the index. Because initially they may not reach certain other filters, but as a going concern, that may breach some of the filters. And then the last one would be that advocacy in terms of Sharia compliance. So Sharia advisors, this is basically what they do in an asset management space. They introduce companies into Sharia compliant interests, and number two is they continuously ensure that those companies meet the Sharia compliance. So, you know, if you invest in yourself and then you have to do all the hard work yourself, I think to a certain degree, and the onus remains with you. However, if you invest, for example, like with Abdul Aziz, then basically himself and the Sharia board, they will take responsibility for ensuring that those companies are actually Sharia compliant. And it does get very intricate, you know, if you look at it, especially with understanding the filters and actually applying the filters. And I must say that, alhamdulillah, in South African space, Abdul Aziz spoke about, you know, like I feel personally, and not because, you know, I do sit on some of the Sharia boards, but I'm a junior member there. If I look at the work that, you know, my peers actually have done in this space, for me, many times it's like trailblazing. And South Africa, at least in as far as the fiqh of, you know, Sharia compliance is concerned, then they're very much leaders and very much independent in terms of what they actually bring to the table in the Muslim space.
So in order for me to make that halal, that initial 200 rand, that hypothetically is now 250 rand, do I have to then calculate my initial investment and what was over and above that by, let's say, taking it out of that? And so what do I do with the 50 rand, or do I have to discard of my entirety, my initial plus the 50 rand that it has given?
Yeah, look, that's a different question altogether. Let's say hypothetically that you invest in a company, and that company, the returns, or at least part of the returns, was not permissible. So there's a formula that the scholars actually apply for non-permissible income. So you want to know which part of the return, the 50 rand return that I got, which part of it is impermissible. Is that what you're asking?
I want to know, do I just, since the 50 rand, the stock has gone up by 50 rand from my 200 rand, do I just take the whole 250 rand out now? And since the 50 rand was gained, do I discard of the 50 rand?
So the 50 rand is, Bismillah.
No, I do. Is your assumption that the investment itself is not permissible? Or I can tell you Mr. Price is Sharia compliant, first of all, so you're safe on that score. I think there's two elements here. Firstly, let's say you bought Mr. Price shares. The share price is now 232 rand a share, if I remember correctly, from Friday. So let's say you bought one share, 232 rand. In a year's time, maybe the share price goes to 300, so your gain is 68 rand. Let's keep it easy. So because Mr. Price is Sharia compliant, you find on that score. As Maulana has mentioned, there is, the last number that I can remember is 5.3%. So there's two calculations that we do. There's firstly the calculation of how much is non-permissible income there is as a percentage of total revenue. In Mr. Price's case, the last number, sorry, my math is not, my recollection might not be great, but it was about 3.8%. So the interest income that they have as a percentage of total revenue was 3.8%, right? So it's under the 5% threshold as Mola has mentioned, so that's fine. What then happens is when you receive your dividend, now let's say they paid a 20 rand dividend, sorry, this is very technical for a Sunday morning. Of that 20 rand dividend, we do a calculation where we calculate how much of that dividend is non-compliant for you, which you need to dispose of. So in your account, whoever administers your shares, they would deposit 20 rand in your account, right? Of that 20 rand, there's a calculation where we take how much interest income Mr. Price received as a percentage of profit, not of revenue, of profit. So the percentage will be higher. It's probably in the region of about 16%. You will take 16% of your 20 rand and give that away, with no intention of rewarding anything, because that's your non-permissible income for the dividend, right? So now you've purified your dividend. Your investment is still Sharia compliant. Now if you decide at 300 rand I want to cash out, all of that is permissible for you to keep. There's no element of you need to give away anything further than that. In the case where Mr. Price has become non-compliant, which is a different question, which I'll just very briefly address. Your original investment, because it came from a halal source, your 232 rand which you used to buy the share, that is totally permissible for you to keep, right? The excess of 68 Rand, you need to dispose of there, in the case where it became non-compliant. The one technicality, which is a technicality, is that you can actually determine on which date it become non-compliant. Let's say it's 300 Rand, and now you get the latest financial results, and the share price has now moved to 320 Rand. You only need to dispose of the 20 Rand excess because that is the excess when it was non-compliant. So these are nuances, and alhamdulillah, we've got the system, we've got access to the information to do those calculations on a daily basis for our investors. But clearly you need to get that same information timelessly and regularly to keep track of your investment as well. Shukran.
So is it safe to say that if you buying your shares just as a consumer, you're checking prices and you know, I don't know if you're using an app or something, right? That you won't necessarily have access to that same information as if you go through a person or a company who was looking at this.
That's right, Maulana. So there's two elements. The basic information, you will need to go look for it because companies, they report every 6 months, they report their financial results. So secondly, you'll need to understand what you're looking for. So you need to have basic accounting knowledge in terms of understanding financial statements. The third element is you need to have something that tells you, that prompts you to say that, hang on, Mr. Price has reported results, I need to go check. If you're a busy professional or full-time day job, you might not have the time, and this is quite a lot of investment that you'll need to do in your spare time just to keep track of your investment as well. And not that I'm pitching for myself for a job, but this is our day job. This is what we do on a regular basis. We've got the system set up. When Mr. Price report the results, on the same morning we get the financials. By the afternoon our systems are updated and we know exactly what the percentages are, what the ratios are, and this is what we do on a continuous basis. So the man in the street might not have access to the same systems. They tend to be quite pricey. I mean, some of our systems we pay $6,000 a month just to get that data as well.
Okay. Shukran. Floor is open.
Just, the Quranic verse that talks about that in general. Even if it was a situation whereby you lend somebody money and now you want interest on it. So your question was just around the principal amount that you put in terms of investment. That generally, or typically, you would always be entitled to that. And the verse of the Quran speaks to that.
Okay, shukran to our panel for answering that question. We have a question.
Just before I go into the questions, I would like to actually get a clarity on the Mr. Price example. What I want to know is what are the determinants of a business becoming Sharia compliant, especially like a company like Mr. Price, whereby we know that their capital or their capital structure is based on interest, whereby they have to borrow money in the bank and pay interest on that. Or also, even when they give you clothes or something, when you buy on credit, then you have to pay interest. How do you determine that is Sharia compliant?
Okay. Should I answer that first?
Okay. Yes.
Okay. So I think we didn't go into a lot of detail given that it's a broad audience and given that it's a Sunday morning. But there's actually detailed quantitative processes that we use. So both on looking at how much interest they receive and how much interest they pay. So you're absolutely right. I mean, the capital structure, there would be an element of bank borrowings. From the policies and the principles that we apply, the IOFI standard says that if a company has more than 30% debt or more than 30% cash on balance sheet, then it's not permissible. So in Mr. Price's case, they don't actually have a lot of debt. And I mean, the business was started, if you look at the history of this, in Durban by two guys, and it was actually called Mr. Cash Price because they were focused on cash. And they didn't start with a lot of borrowings. And for the last 30 years, Mr. Price never had a lot of borrowings. They had a lot of surplus cash, and they actually earned more interest than they paid interest. And then the other point is that, when we do the calculations, as I mentioned, we calculate how much interest they pay and how much interest they receive. And we don't net the two off because, interest is interest and there's no netting off of that. So the calculations that we do, Look, the reality is and as Munas mentioned, all of these companies, they've got conventional bank accounts. So they either earn interest or they pay interest. Our job is to make sure that those are within manageable levels so that 95% of the business is compliant. To the second point that you raised, if you look at the credit side, it's My Ladies. So My Ladies is part of the Mr. Price group. And they've introduced some credit in some of the other, especially Mr. Price, the keys chain as well. Even with that, the interest income is below the 5% threshold. And that's something that we monitor on a continuous basis. I'll just share another anecdote with you. If you look at Woolworths, for example, and this is quite pertinent to our community because, people might think that, okay, Woolies, they sell clothes and they sell, food. But we go to the extent where we look at how much non-permissible meat and non-permissible products and how much alcohol Woolworths sells. We then add that to the interest received that they have. And obviously you can buy credit on Woolworths as well. So there's an element of interest income. And we then combine all of that. And given that I've got the numbers, currently Woolworths, if you combine the interest income plus the sale of non-halal meat, plus the sale of alcohol, it's about 11.2%. So Woolworths is not compliant from our point of view. But there was actually a period where Woolworths was compliant, when the Australian business, which was purely clothing retail business, was quite big in the business. And so all of those other components was at the peak 4.7%. So that's why it's important to continuously check, because companies also change over time as well. Shukran.
Yeah, sure, President. I would just like to ask Shaykh Abdul Aziz just a few questions. First of all, I would like to actually say you have given us a good presentation, and shukran for that. Okay. I wanted to know, how does Islamic finance address challenges of the modern financial markets, such as mortality and risk management? And also, I would like to ask, in what ways can Islamic finance principle integrate into the modern financial markets that we have today, without actually losing its core principle?
Yeah, I think those are the fundamental questions, which are long, sort of heavy questions for a Sunday morning. But I think just in summary, we've done a lot of work in terms of looking at new developments in Sharia-compliant investing. Firstly, from a risk management point of view, and we've got the COVID experience of 2020. We all remember going into hard lockdown. That was actually a very turbulent time in markets. And I always tell people, you can see the value of Sharia-compliant investing in volatile markets. And I can honestly say, if you look at that period, the Sharia-compliant funds, not just locally but globally, outperformed during that volatile period. For the simple fact and simple reason that because we've got those, and there's a lot of wisdom behind a lot of the metrics and the qualitative and quantitative filters that we use, that those companies, because they have what we call stronger balance sheets, they don't have a lot of debt, they're forced to manage their balance sheets more efficiently and more conservatively. They generally tend to do a lot better during those volatile times. So if you remember, we went into hard lockdown, we couldn't go to the shop. The police, they were checking on us. So a lot of companies didn't earn revenues. What then happens is they still pay their staff, even if it's just a percentage, but then the banks, for those that have a lot of debt, they couldn't say, hang on, we can't pay interest. So the companies with a lot of debt and high gearings did a lot worse. So the earnings obviously fell further. So from a risk management point of view, Islamic finance is naturally, positively disposed to that. In terms of contemporary sort of developments, alhamdulillah, I think even in South Africa, the Sharia-compliant investing, in terms of gaining opportunities for investing, providing the necessary structures, it's all there. Be it, and Nasief is an expert in terms of, talking about conservative, investors, risk-averse investors, to people that are more risk-taking. That is ultimately what it's all about. Are there opportunities for you that cover the full risk spectrum, from low risk or risk-averse to potentially risk-taking, more younger, people with longer time horizons? Alhamdulillah, the products are there. Even with, if I look at South Africa being a Muslim minority country, we've got products here in terms of, for example, the government sukuk, which a lot of even Muslim countries don't have, in terms of the developed nature of it as well. So alhamdulillah, that is not a constraint. current developments, current sort of Islamic finance opportunities. It's all available for us as Muslim investors as well. Shukran.
Okay. We'll go on with this for another 10 minutes, inshallah. Oh, you okay?
Yeah, I know.
Okay.
I actually other questions from the two speakers.
Okay.
It's fine.
It's fine. Bismillah.
Okay, Shaykh Muhammad Carr, can you please explain to us how do we differentiate, or how to make a difference between interpretations of Sharia law and how they affect the development of financial products and services? And also, I want Shaykh to actually help us understand the mechanisms that are in place to ensure that financial institutions remain compliant with the Sharia principle over time, and especially in the context of South Africa.
Bismillah. I think start with the second question. If I may regurgitate the question to make sure that I understand the question correctly.
The second.
The second one.
Okay.
Now I want to regurgitate it to you. How do we maintain Sharia compliance? Is that the question?
Yes.
How do we maintain Sharia compliance? So you'd find typically in South Africa, across the board, in terms of Islamic finance, which would be like asset management and insurance, and then also banking, you find across the board that generally, whenever you have a Sharia-compliant product, then that Sharia-compliant product, number one, it's created by Sharia advisors. The product is created by the Sharia advisors. And number two is that the product is also monitored by Sharia advisors. So the integrity in terms of Sharia-compliant products is both in terms of the inception level, that the products are created by Sharia scholars, and number two, it is monitored by the Sharia scholars as well. So you would find that typically, and not also one scholar, we live in a time, and I've seen this benefit myself, we have Ilm al-Jama'i, collective. So generally you find that the Sharia advisory board are made up of 3 individuals. And so they create the products, and they always have line of sight of the products as the products develop. And typically you'd find that the Sharia board would at least meet twice a year, so biannually, in order to ensure that Sharia compliance is maintained. So that's at a very local level. And then, as was alluded to before, that there are many standards that are basically set, Sharia compliant standards and regulations. The most famous by large, or the most well known, and also most respected would be the IOFI standards. So in certain jurisdictions, that almost like following the IOFI standards is mandated. In other words, it's law, it's enshrined in law, you must do it. Whereas in South Africa, it's not like mandatory, but by and large, that are the standards that are applied on a day-to-day basis. Scholars do, move away from the standards when there's a requirement for it, but that's by and large the standards that they normally commit to. And if you look at IOFI, just the chairman alone, Mufti Taqi Uthmani, and if you know his work like in Fiqh and so forth, you would find that this is not something that's basically thumb-sucking. It's something that a lot of one standard I was told now takes about a year or 2 or even 3. I've been told now it's the standard number 62, which relates to sukuk, actually being how can I say, redone or something, and it's taken so long to actually do it. So that's basically how governance, Sharia governance is intended. I hope I answered the question. That sort of answer the question. Yeah. The first question was the first one.
Well, the first question actually was, how do different interpretation of Sharia law affect the development of financial products and services?
The differences. The differences.
Yeah, the different interpretations is something that has really, you find that from an ulama point of view, that sometimes one person follows one another. So like, you know, like in ibadat and so forth, you follow, like we predominantly follow the Shafi madhab. Practically and on the ground, you would find that people would say that, you know, in as far as your ibadat is concerned, it's very pragmatic to follow one madhab. And it's actually the easiest thing to do if you really look at it. But when it comes to mu'amalat, there's almost like a pseudo consensus among scholars that in order for us to find solutions to challenges that we face in the modern market, that you maybe as a starting point you look to what your madhab has to say, but inevitably in order to provide solutions to what's out there, you're going to look at what the four madhab generally, or even beyond the four madhab, what solutions there are, you know, to provide a solution to the problem. And I think many times, and that's where interpretation really comes in. So I remember when Atta Rahmatullah alayhi used to say that, you know, something which is halal and mustalah fi is better than what is haram, muttafaqun alayhi, you know, type of thing. So you, and also you really look at it practically, and this also when Atta Rahmatullah used to say that, you know, the whole idea of ijtihad. Ijtihad is alive and kicking, and where is it alive and kicking? Primarily in mu'amalat, when you know solutions need to be found in order to make or to facilitate that the taklifiqi, the jurisprudential construct of the context are such that it actually puts it into the ambit of it which is halal as opposed to the ambit of which is haram. So you find there's a great latitude generally in the field in terms of like a degree of liberal-mindedness when it comes to finding solutions. And you find that is quite prevalent. I hope that answers the question.
Shukran. We have two questions on the side, inshallah. Let me just move it. Okay, we're going to just take the two quickly that side. Inshallah, they will be around. You can actually grab one of them and take one of them home with you. No problem. Okay, Riza first, then the brother there, and then the one at the back. We got three questions.
Firstly, I just would like to thank Maulana and Nasief for arranging this workshop. I think it's something I mentioned to Maulana in the week, that it's something that is really needed in our community. And for those of us that has been in the industry promoting Islamic finance and Sharia compliance, something that I've picked up personally over the last probably 30 years is that trying to motivate or promote Islamic finance in Western Cape is much more difficult than the other regions. And that is why I was so grateful for Maulana when he introduced it or had a lecture in Majuma, because I've always felt that from our ulama, there is a platform that needs to be used to promote Islamic finance. Maulana mentioned that we're living in an interest-bearing society where interest is all around us. And just something that I always also, Maulana didn't mention it, is that although we as we bank with these interest-bearing banks, and then a lot of people say, look, I don't take part in the interest-bearing instruments that they offer, I just bank with them. But we need to realize that those of us who get paid a salary and your money goes into their account, although you are not using the interest, they are utilizing your funds to basically get more interest. So it's just something that we need to grow. And I've just got three questions for each presenter. Just for Abdul Aziz firstly. You've mentioned we've got a lot of youth here. And just something that maybe if you do have time, just a small practical example. Look, when we grew up, the concept of saving wasn't something we thought about. And something was, I attended a workshop a few weeks ago where they just mentioned, and we did slightly talk about it, that for us to retire and continue the lifestyle that we have currently, your retirement savings should be sitting at something like 30 million rand. So you've mentioned that 74% of our people cannot retire and continue with that lifestyle, which is something very important. And just something, maybe if you can give just a practical example, especially for the youth, why it's so important to start at this age. And remember, especially in terms of your platform of products, it's long-term investments. And we've been given examples where if they start now with a simple saving, what it will end up, just as a practical example for them to see and the importance of that.
Yeah.
And then for Maulana, just on, if Maulana can just reiterate again, I'm still, in terms of my dealings with clients, especially in the Western Cape, there are still people who will tell me that you are saying it's profit, it's just another word for interest. If Maulana can just give the Islamic just breakdown of that, what is the difference, so that in just layman's terms that our people can understand what is the difference and why it's so important. When I mentioned the reasons why we should be investing in Islamic products, but just give that. And then just for Nasief, if you can just give a small overview just in terms of some of the products that you do offer.
Okay. So if I can start, I think, and all of us, we all started late. I only started saving really when I was probably in my 30s. I'm still in my 30s. But to just give it a powerful effect, and fortunately there's been a lot of research in this space. If you take a 25-year-old, most people, they start working at 25, right? If you start saving at 25 and you save for 10 years, so from 25 to 35, and you stop, right? You don't put more money in, just let the money stay there. You don't add to it. So you save for 10 years, every month you add, and then you stop after 10 years. Your savings will still be more than somebody that starts at age 35 and then stops at 55.
Wow.
So somebody that starts at 35 and saved diligently for 20 years will still have less money. So let's say this brother A and brother B. Brother A starts at 25, they start the same job. They've got the exact same job and they do exactly the same thing, and brother A starts saving from his first paycheck at 25 and he stops at 35, but he leaves the money there and it grows. Brother B, he starts at 35, he's enjoying the high life, we're doing everything else. Starts at 35 and then saves for 20 years. Brother A will still have more money than brother B. The reason for that is two things: the compounding effect of having your money invested, and also the benefit of time. And Nasief has been a great proponent of that. It's time in the market, it's time for investment. As opposed to the second brother, he hasn't been in the market for the first 10 years. So he's missed a lot of that accumulation with brother A. That's the first point. The second point is, if one looks from a retirement savings point of view, and Nasief McKinney is the expert in this, what I recollect from way back, they talked about the rule of 8. So the rule of 8 says that if you, let's say you at 65 years old, if you want to maintain a similar lifestyle to your last paycheck at age 65, which means that you roughly need 80% of that same income, post-retirement, you need 8 times your annual salary. Now, who's got that?
Yes, I know.
So you needed to have saved up to get to 8 times your annual salary by the time of, so the 13 million, it depends. I know, Maulana is he's got a different lifestyle compared to me. Maybe I need 5 million, Maulana needs 13 million. But the point is that you still need 8 times your annual saving, or annual salary to be able to be comfortable in retirement. So that 74% number is scary. And, and again, and unfortunately in South Africa, I say unfortunately, because we've had the two-pot system, a lot of people access their retirement savings, and if you use that retirement sort of access that you have, where you get the 19,000 or whatever amount you took last year, and pay down debt, that is great. But if you use that to buy groceries or to consume or to go on a holiday, that is a disaster, because that is going to come back and bite you at retirement as well. So again, this culture of disciplined savings is quite important as well. And I don't think this is a small drop in the ocean in terms of this workshop. We need a lot more of this, and as you rightly said, we need to let it come from the member. I'm a layperson, people are not going to listen to me, they're going to listen to the ulama. If the ulama says, we need to do this, then I think it's got more power and more effect as well. Shukran.
Jazakallah for your question. I think there's a number of ways of addressing the question, and I think the word is ubiquitous. Like everybody says this. There's no difference between Islamic finance and conventional finance. Exactly the same thing. You're just changing. I think in corporate terms, they say the literals. You're just changing the word from profit to interest. You're changing interest to profit. I think from a religious point of view, And in other words, from a Quranic perspective, you would find that this argument is not a new argument. It's an argument which is reproduced in Quran. The pagan Arabs used to say, أَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. You know, how can this be? You know, Allah subhanahu wa ta'ala has forbid interest, but He allows sales. And they're the same. If you look at the outcome, perhaps,
إنما البيع مثل الربا.
إنما البيع مثل الربا وأحل الله البيع وحرم الربا. So they talk about, I guess, exactly the same thing. Shaykh Abdullah ibn Mani, I believe he's still living and is quite of age. He came to the Muslim Judicial Council and he gave a talk in the boardroom. And he says that the person who likens a Sharia-compliant product to a conventional product falls into one of two categories. The one is worse than the other one. The lesser one is that he is an ignoramus. He doesn't know. He doesn't understand the difference between a sale and a loan. So that's the one category. And that's almost like an okay category to fall in. The other category is that he falls out of the fold of Islam. Why? Because, you know, when you make istihlal, لا تقولوا لما تصف ألسنتكم الكذب هذا حلال وهذا حرام لتفتروا على الله الكذب. So he says that the person who likens interest to a sale, genuinely, he sees no difference between the two. It's exactly the same, and he believes that to be the case. He could very well be out of the fold of Islam. Why? Because he has equated between two things and Allah makes a difference between the two. So it's very, very important to understand and appreciate. But now, look, I don't say you must say this to the people, no? You're going to scheme and, you know, this type of scare advertising, you know, Muslims, we shouldn't be doing it. But that's a reality. But maybe you can give him the following example. If he says it's the same thing. Look, if a boy and girl, the reason why I mention this example is because one Haji told me in the class in Garland that he said, you know, I never understood this until you gave that example. So maybe, you know, that example will resonate well with, you know, our dear brothers. And the idea is what I want to explain this in a manner that creates a desire within you to practice upon Islam. And our deen is beautiful like that. You know, when you practice on deen, it brings a benefit to you. If you practice upon it. And when you stay away from that which is prohibited, you automatically skirt a harm. So girl and boy comes together, right? And girl and boy comes together. What do we refer to that? Fornication or adultery. That's wrong. Same boy and girl, they do the same thing, but within holy matrimony. What's it called? It's called the act of charity, sadaqah. So the act that's happening is the same, but the format is different. The moment the format changes, then it's. I'll give you another example, and this is very important for us to understand, and there's another sort of like Islamic philosophical thing which comes as we think that, you know, good is here and bad is there. Not realizing that from a Quranic perspective, and this is a lesson in time on its own, that the differences between good and bad is sometimes, it's always profound but subtle. But it's like night and day. Layluha kanahariya. I left you on a path that, you know, it's very clear what is right and what is wrong. The other example was on one occasion, the Prophet ﷺ can accept zakat. We know that it's not permissible. Aisha is a slave girl, her name is Barira. She accepts zakat, she gets zakat. And then of the zakat, which is a foodstuff, she gives to the Prophet ﷺ. The Prophet ﷺ partakes thereof. They could just, oh Prophet of Allah, you can't have that. That's zakat. What does the Prophet ﷺ? Laha zakat, wa lana hadiyah. That she received it as zakat, then once she has assumed ownership thereof, by virtue of the owner and a rightful recipient of zakah, she now gives it to me. It's no longer zakah, it's a hadiyah to me. So it's very important, and that's why I'm saying this like, I say it because you must just say things as they are. My thing is that I've seen, you know, the virtue of, this is in the formal industry. I have a deep respect for the pioneers of Islamic finance, particularly in South Africa. You know, for you to consume that which is permissible is a very virtuous thing, isn't so? That's actually one of the most important priorities in terms of your life. That whatever I eat, it must be permissible. So is that a virtue? Yes. Now what about those scholars that facilitate that the yield of your investments is halal? If eating halal is virtuous, then a person who facilitates that you eat halal is even more virtuous. So I think it's not nice, it's not a good thing. It's actually it's indicative of ignorance that we just simply say that, you know, it's exactly the same. You know, they're calling this profit, and somehow or the other, this type of idea just pervades and pervades and pervades. And what does it come down to? It comes down to financial literacy sometimes. And I've been in some meetings myself and Nasief and others. They say that comparatively speaking, that South Africa as a country, our financial literacy is one of the lowest if you compare it to other countries. So not only do we need to get better financial literacy, but also we need to learn a bit more about Islamic financial literacy. Even sometimes our attitudes that we have was, you know, dunya. You know, that's actually not the correct way of looking even at material wealth in that particularly negative way. So I would encourage financial literacy, Islamic financial literacy, so that we don't say compromising things like it's the same.
So just before I give clarity on what it is we technically do, I just wanted to put an example out there of a customer that came to see us about a week ago. So this individual bought a house for 350,000 rand 20 years ago through the riba system. His monthly repayment is 3,000 rand a month for the past 20 years. What do you think the settlement value was today after all that years of him paying the 3,000 rand a month? Anybody? Double. Anyone else?
1.9 million.
It's actually close. So it worked out close to 2.5 million rand. So he paid 350,000 rand for an apartment. He came to see us to do a financial plan. In his mind, he had an assumption that the apartment that he's living in, he wanted to sell it for 900,000 rand. So he thought he made 600,000 rand profit. But look at the value of what he paid over that 20 years. So what we do holistically, before you make decisions like that, we actually sit with you and you walk with you through that journey from an Islamic perspective. We'll actually show it to you, illustrate it to you, what you can achieve from an Islamic perspective. So in our space, Brother Riza asked, what do we do, what do we offer? We offer everything that there is in financial planning in the Sharia space besides the banking aspect. So Al Barakah is there that offers the Sharia-compliant banking facility. Everything else from retirement planning to estate planning, everything we do it from a Sharia compliance perspective. So we want people and we want the community to start realizing that you can create wealth. There is Sharia means to do that. Abdul Aziz mentioned earlier, we want the youth to become entrepreneurs because they're the future. We want to educate the community, provide financial literacy. We're not there to sell anything to anybody. The idea is to empower people to make better financial decisions, ultimately. Because if you look at the economy currently, to empower the community, we need more entrepreneurs to create more employment. And that's why we want to educate people. Without that, the economy is not going to move forward. We need to come up with solutions. Us sitting here as a community, we have solutions. It's just a matter of us sitting, coming together and seeing how do we empower each other through that. Okay.
Shukran. Okay, shukran. We're going to entertain 2 more questions and then we're going to wrap up, inshallah.
Assalamu alaikum wa rahmatullahi wa barakatuh. With all due respect to our ulama, particularly in the finances area, the deen, alhamdulillah, I just want to bring to your attention the following. I listened to everything. I listened to endowment of Sayyidina Uthman where it all started, and I'm asking myself, what endowment do we leave for the future generations that's supposed to come? We as a community, apartheid has ended in 1993. We can understand that our parents, they were influenced by apartheid and education was educated. We had a gutta education. Afterwards, education became a bit worse, but there was better situations for us, chances for us to move in the industry. Like Maulana Zakaria said, we need to generate capital, and to generate capital, we need the youth. And like Shaykh Abdul Aziz said, we need entrepreneurship. How to get the funds to the entrepreneurship.
But if you look at the inflation rate and the profits that the people who invest makes, and to keep it up to date with your inflation, how is the starters going to get the capital? That's one of my questions to Shaykh Abdul Aziz. And to Shaykh Muhammad, the following question is on interest. I feel that in the time of Rasulullah sallallahu alaihi wasallam, he did make loans from the Jews. I know I read it somewhere, there was grains and his armor was, there was a situation. Now, I don't know whether it was before the revelation of Ya ayyuhalladhina amanu la ta'kulu riba. Shaykh will tell us whether it was or not. But now, what I want to ask is the following is, shouldn't we look a bit more differently at interest? I do understand وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. You know, there's a difference between interest and profit. Because if you take the profit route, it's barakah. You go the interest route, it's curse. You know. But I also understand that if it's barakah, why must the barakah be so high for the one who's borrowing? Can't he drop the percentages? You know, why should it be higher than what the actual interest will work out over the same period? Now, the third question now, Sheikh, I don't want to go deeper into that. Nasief, I didn't get so nicely, you're from Al Barakah Bank, right?
No.
Okay. But you do promote Al Barakah products. That's what I picked up. Anyway, from Islamic perspective, now Islamic banking, right? Is Al Barakah Bank really there for entrepreneurs? You know? Because I remember when I started my business many years back, I went to Al Barakah and their interest was the interest of the investors. And then it was, if they borrowed to me and I'm high risk, it means that the chance of the investor losing would be high, so based on the inflation. So they wanted to ensure, and I remember Shaykh Abdul Aziz said the same thing, you know, that the investor would like a return, and this is all about investment and inflation related investment that is much higher than inflation. Anyway, but Sheikh Nasief, since you're not with Al Barakah Bank, but maybe you can just help us on that. How can we in the future encourage a type of a system that would provide finances to our youth that we start now? You know, that's what Shaykh Abdul Aziz said. We need to start something now to cater for those in the future. And I have a kind of an answer and a suggestion based on the insurance policy process. If you tell somebody, listen, yeah, I'm going to give you a return in 50 years' time. Invest now. This is your insurance. Then, and you are people who knows about investments. And I liked what you said about the unit trusts, the return on unit trust. I like that. It's brilliant. And I thought that is maybe where I don't understand returns. And I should come and talk to you, inshallah, about that unit trust. But anyway, I lost it. Anyway, that is basically what I wanted to ask is, in the future, can we not ask people, promote something where people invest and they will see the return in future times, but the investment is handled by our professionals here. You know what I'm saying? Like on a bigger scale. We're not looking at 1,000 people, we look at millions of people. I don't know how many Muslims is in Cape Town. If we all can start and every month put something into an account as an investment, and we get a return, we will be offered a return on it also, because the money will be invested, there will be dividends based on the unit trust. Right, so there will be a bit of return as well. And if you continue this for as long as you live, then you should have a fairly big investment in the future, but the community will have a strong basis that supports all our processes as well.
Okay. I don't want the question to get lost.
Okay,
yeah, because you asked 3 questions and I don't want the questions to get lost. So I hope that you still got the questions. Okay.
Bismillahirrahmanirrahim. I think the concept of entrepreneurship is a very vital one. And as I said, I did a talk at the high school in a week. And for many of the kids, and I think it's fundamental to the education system. Because our education system is geared towards getting people to matric and getting them into university. And I think that needs to change. We need to change education to equip people with the skills to create jobs for themselves, which is effectively what entrepreneurship is all about. If you look at a lot of, even the Western society and other developed countries, entrepreneurship is a subject. We don't have entrepreneurship as a subject in South Africa. And I'll put my hand up. Alhamdulillah, I've been fortunate to be involved in a lot of smaller businesses. And I think it's a sorely needed subject and something that I want to brainstorm with Nasief and Muhammad as well, in the sense that we need to create a platform where we teach entrepreneurship, we give people the necessary skills, and maybe even partner with the likes of Al Baraka Bank, where, and I'm sure you've all seen this Shark Tank thing and all of these type of shows where you pitch a business idea and you've got a few sort of investors that if they like your idea, they invest. And I think that is what we need in our community. Because like Nasief said, the economy is not growing. We are not creating jobs. We're an economy that is shedding jobs. So we shouldn't be training our kids and our matriculants to go and study or to try and get a job at a company. Because guess what, those companies are not creating jobs. What we need to do is give people the necessary tools and skills to create jobs for themselves by starting a business. Just one idea, and hopefully the youth are taking note. I'm sure you've seen all of these guys on the bicycles, these sort of electric bikes all over the show. That is something, you can get a partner involved, get somebody to help co-sponsor or finance you that bike, and then you start doing deliveries. There are so many people that are sitting in the Sasa queue, come Sasa payday, they've got other things to do. Maybe go there and, even if you sell a sandwich to them or tell them, can I run an errand for you? Because, there are so many, if you drive 10 o'clock on a Monday morning or 10 o'clock on Tuesday morning, you see so many youth outside. They're unemployed. They're young, they're fit, they're healthy, they've got time. The one commodity we have, and people need to start thinking differently. And Sheikh Halal, you're there, we need to have this discussion as well. If you go to Scout Crowd, where Sheikh has the institute there are so many youngsters sitting there on that corner as well. They're healthy, they've got time. Those are assets that we need to mobilize, that we can harness. There are maybe capital providers that don't have the time, they don't have the help. And like they teach in economics, factors of production. Our factor of production, our biggest asset for our youth is time and health. We need to make it work for them. And I've got so many ideas, I don't have the time or the help, unfortunately, to implement these. But I think there are ways and means that we can create opportunities for our youth using their two key assets, which is time and health. I'm not even talking about education. Those are things that we can talk about at a later stage. But definitely, I've got a lot of ideas. There's a lot of issues that we need to address. But fundamentally, I think the key point, and I'll terminate on this, is that instead of looking for a handout, instead of looking for somebody to give you a job, or instead of looking for a NSFAS to give you a student loan and fighting with 800,000 other students to get into 50,000 positions at universities, think differently. Think about creating a sustainable income for yourself through entrepreneurship. Shukran.
I think just to add on to what Abdul Aziz said, there's so much opportunities out there. It just takes a matter of us sitting down and having these discussions. In our space, so I'm not from Al Baraka Bank, you correctly said, Riza is from Al Baraka Bank. In our space, we have access to asset managers. So there's a lot of entrepreneurs that come to us, have discussions. And in a lot of cases, we have angel investors with some of the asset managers. So the youth comes in there, they pitch the idea, and we see the viability in the idea. And some of the asset managers or angel investors will actually buy equity in those businesses and share in the profits with the youth.
MashaAllah, Hajj Marwan, thank you for your question. Allah SWT reward you abundantly and increase in goodness. What I understand from the question in terms of perhaps an objection would be the pricing structures. In other words, when you go to conventional finance, there's a certain pricing structure. And then you find when you go to the Sharia-compliant finance, then It's either the same pricing structure. Is that one of the objections?
I just lost the plot there when I tried to come back to that. Sorry. On the banking system, Sheikh, I'm just looking at the Islamic component that is established at ABSA and Standard Bank. I actually wanted to look at that. I do understand that there is an Islamic component, and I do understand the influence of it. But I'm not totally in agreement with it. Because these banks also have, like you said, the dust of interest. And I don't think it's even dust. But anyway, these banks have an interest system as well. So I'm not totally in favor because of that. And the second part is the law is basically what I said last, is we need to find our own banking system that supports our people instead of going to the Yahudi banks. And that is basically, I missed that point.
Look, I think just in general, like if you look at, and there's a verse of the Holy Quran that sort of talks with that idea, but I'll end off with that verse. You were talking about Al-Barakah. On one occasion, I had the opportunity to go to an annual conference and invited scholars. So one of the board members gave a presentation. So obviously he's talking about the bank. So he spoke to this whole idea of that as a Muslim community we have multiple needs. Not all of those needs are going to be facilitated by an Islamic bank. I think that's important to appreciate. Yes, the bank as a business is going to cater for certain needs, but the Islamic bank does not present itself as providing solutions for all of the challenges that the Muslim community may have. It's like sometimes when we look at things somewhat simplistically, when we say, if everybody pays their zakat and we avoid riba, all of our problems are going to be solved. That's not necessarily true. Islam provides us a bouquet of solutions to different problems that we have. So the encouragement that was coming at that particular point in time from Al-Barakah Bank was what we see the seeds of today. That we're saying, look, okay, the bank does fill a particular function, but there are other needs within our community that also needs to be catered for. And we need to establish those facilities and institutionalize those facilities in order to cater for those needs. What are those needs? There's needs to develop entrepreneurship. There's needs to facilitate for banks. At the end of the day, a bank is a business. But then also you need a type of solidarity funding. And maybe I can look at this in terms of the verse of the Holy Quran. Again, talking to the structure which in Surah Al-Rum, which is one of the verses where Allah SWT talks about riba. So what he wants to tell you is that وَمَنْ آتَيْتُمْ مِنْ رِبًا لِيَرْبُوَ فِي أَمْوَالِ النَّاسِ فَلَا يَرْبُوَ عِنْدَ اللَّهِ. That which you give as interest in order to increase the wealth of people, it doesn't increase by Allah. It might be a nominal increase, but there's no blessing within that. But Allah gives a context to that. So before he talks about a type of financing that is very individualistic, because only the lender actually benefits, because he gets his principal amount plus the interest, irrespective of what happens to the entrepreneur in his business. So that's the type of individual look at things. Before that, Allah talks about the phenomenon, and he talks about solidarity spending. And that is also the seeds that you see that are growing here. Allah says, فَآتِ ذَا الْقُرْبَى حَقَّهُ وَالْمِسْكِينَ وَابْنَ السَّبِيلِ. So outside the sphere of debt financing, let's say for example it's for entrepreneurial purposes, in order for the community to flourish as a whole, there is another type of financing which is called solidarity financing, takaful, which is also needed. And the need for such type of financing will never go away. We can't, I think, reasonably expect the bank to do all of that, but rather we as a community must, and I see the seeds of that, we need to galvanize, and we have the theory, and it appears that we have now the will to actually come together. And I must say that this idea, it's for the taking, for lack of a better expression. And I think the time is right now. It's really in my heart, it's a burning thing. That how is it that up until now we haven't really galvanized to create that facilities of solidarity spending whereby we can take our community forward. So Allah SWT place blessing in coming together, and the ideas that we have, we really need to come together and really bring this idea to fruition, where we're no longer talking about it in terms of theory. The theory is there, our fiqh books are filled with the theory. We basically need to translate that theory into practice with our constituencies, our Muslim community as the ultimate beneficiaries thereof, inshallah. So may Allah SWT make this gathering and your participation a means of that.
We're going to take one more question. I'm going to ask the questioner to be to the point, inshallah, and I'm going to ask those who are going to answer also just to try to wrap it up in a very succinct manner, because we want to just serve you something to drink, the Jama'ah, before the adhan for the Dhuhr, inshallah. So we would like to end. We'll take the last questioner, please.
Assalamu alaikum. Shukran again to the panel. The talk is very insightful. I thought of today. It's just a question relating to the actual process of investing. So, if I approach an Islamic investment institution and now I speak to a consultant, like what is the platform of communication and how often is that communication related? Because stocks are going up and down all the time. So how do I know, like, someone who doesn't know about stocks, what is actually happening to my investment? And then also the price ranges of stocks that I can invest in as a newcomer into this market or industry.
Shukran for the question. So, for us, it's a journey that we walk. The idea is to understand what your goals are. Is it a short-term goal, medium goal, or a long-term goal? So before we can give you any advice, it's important for us to understand your risk tolerance and how long you want to invest to achieve that goal. Before we can give you any advice if you want to invest in a low risk or high risk or medium risk. And to put it also in perspective, once you start investing, we have a review with you either on an annual basis or a biannual basis. So we're not just going to put you in a product and walk away. The idea is actually to walk that journey with you, because we understand that the community don't understand the stocks, when there's volatility, when there's no volatility. So the financial planner is actually there in that times of turmoil to explain it to you, to hold your hand through that volatility. Look, I'll give you an example of an investment. If you had to invest for Hajj as an example, I put my name down today. In the next 7 years, my name, I get nominated to go on the journey, inshallah. So if I look at the time period that I'm going to invest in, so 10 to 1, you can't be put in a high risk investment because you could be caught any time within that 7-year period. So those are the things that we look at before we put any client in a investment for that matter. Does that answer the question?
Okay.
So the price ranges for stocks, like how is that looking?
So if you're buying stocks, you can either buy directly in stocks, as the brother said early on, or you can do it through one of the financial institutions, either through a unit trust, ETF, or endowment policy. But it also depends on you as a person, if you want liquidity in the investment or if you're doing it for the long term. So the minimum that you can go into for investment purposes is 500 Rand. It starts at 500 Rand or 5,000 Rand as a lump sum.
Okay, shukran. Nasief is at Fairbairn Cafe in KC. So, and you have direct access to him, inshallah. And that goes for everyone, inshallah. I would like to end off this program by thanking our panel for availing themselves this morning. It has been highly enlightening.